Con Sonnet, folks. You know I'm back, and it's been a rough time. Look, I gotta be honest. There's been a nightmare situation going on for me. Basically, it's been tough. It's been tough this last week, so haven't been able to get any content. Just as obviously I hadn't before, but a lot going on. Still thinking about topics here too. So always feel free to comment your topics. You got to do that for me. I'd love to talk about anything you want me to talk about. Just feel free to leave it in the comments there. We'll talk about them. But needless to say, finally I have the room back. I'm able to go ahead and record now today. So let's go ahead and start at it. Okay. Today's topic is going to be a simple one: the basics of fundamental analysis. We'll also go into technical analysis. I know you're excited about that one. But first, we start with fundamental analysis. Definitely a concept a lot of people have heard about. Maybe not everyone knows about it. Let's take a look and do a deep dive. So my main thing here, obviously, you see, we talk about the X's, the O's, the Jimmies, and the Joes. Okay, that's the main thing here with this fundamental analysis. And that's what you see here in the middle here. We see the X's, the O's, the Jimmies, and the Joes. Okay, that's the main thing. Jimmy's being on offense. Naturally, that's what you would assume. So, just simple fundamental here. Obviously, what we can read off of this defense, we know they've got a star right here at the right end. I mean, he's an absolute stud of a defender. So we've got the tight end to chip. Just makes sense. We're going to help our left tackle out there. He needs help. I mean, he's going to need help with that. We're going to do a chip with our tight end. Very simple procedure here. He's going to do a little check and release. And then he should be, after this, able to do a little zig out. He'll be wide open, right? They're showing man coverage, so this linebacker here is going to be in coverage over that tight end. He's going to see the block attempt there and kind of give up, potentially fall back into coverage, even though he's not playing zone. They are playing two deep safety, so obviously one of our guys is going to have to win a matchup if the tight end isn't open. This is our number one guy in this route on my pick. And our running back is going to stay in just to block, just in case we need any support anywhere else. So that's the main premise here. But that's fundamental analysis, folks. Let me draw up those plays any other time you want to hear them. I'd love to. I got a lot of concepts. The NFL's waiting for them. Coaching staff will be probably calling me pretty shortly because these concepts are they're just genius. Okay, I'm actually an offensive genius. We're not talking about Nathaniel Hackett here. It's me. So first off, fundamental analysis. Let's just take a deep dive here. First, look, I'll pull up the Investopedia. I don't care. What the heck is it? So fundamental analysis, obviously it's a method of determining a real or fair market value, also referred to as intrinsic value, as I've highlighted here. Fundamental analysis measures a security's intrinsic value by examining related economic and financial factors. Subscribe to Stock Market Sense. Whoa! Where'd that come from? I mean, look. It's saying it. Investopedia's got it on there, folks. You better subscribe today. They're specifically mentioning it on there. That's pretty wild. Wonder why they had that on there. That's really weird, but it's what it says. So I hope you listen there. So obviously brief explanation there, as you understand. What does that mean? Fair market value. Basically, it's mean what is the company actually worth? When you look at actually what it's valued at from a market cap standpoint. What is this company deep down actually worth when you look at the bones of the company, the X's, the O's? What is the company worth when you're looking at it compared to, obviously, economic factors going on right now, competition, and other various market factors that are included as well. So definitely a lot to consider when you look at fundamental analysis. So what are we going to look at when we talk about fundamental analysis? Well, first off, you see, obviously, we're talking about EPS, as well as a PE ratio, right? We look at these numbers and we wonder what in the world are we talking about here. So let's go ahead and obviously here look what we have here. We've got none other than Apple, Dapple listed here, and you know we love Apple, right? It's our favorite company. You can't beat Apple. Sorry, that's not a recommendation, folks. I guarantee it. So we take a look back here. And we look, obviously, every quarter, companies report their earnings, and they do that in a number that is referred to as an earnings per share, or EPS. And I think you can understand where we're going here, right? So basically that is referring to the fact that this is the attributable earnings per every outstanding share. because obviously every company will have shares outstanding, not a shocker. We look at something like Apple. Let's see number of shares outstanding. This is a short interest. Get that out of here. 15.91 billion shares outstanding on Apple. I don't know if you can actually see that. Let's go ahead and adjust that for you. Yeah, let's just make this a little bit better for you. See how I moved that on the fly? Pretty impressive, huh? So 15.91 billion shares outstanding. So based off of that number, you'll obviously take your earnings divided by the number of shares outstanding. It makes sense. Earnings per share, right? So the total amount of earnings divided by the number of shares outstanding equates to your earnings per share. And you see with Apple, most recently here, we have an expected line here of $1.98 is the consensus. And you look at historical earnings too, and that's how you get some of these great numbers, right? So we look here. This is a great little chart here, and we're just on Charles Schwab's website. A little bit of Chuck Schwab, nothing wrong with that. That's just what we look at here, and you look at historical earnings, and let's just see what we're looking at here. Q4 most recently, you see the actual earnings at $1.29 per share, and then $1.20 right after that, or right before that, $1.52 right before that, $2.10 right before that, and this one obviously expected to be pretty high. So again, that's where you get into this fundamental analysis. It's wild stuff. It's very exciting. So then a couple of the numbers that are relevant here to look on the right side. Obviously, revenue is definitely, when you're analyzing a company, revenue is very important. You see how much revenue they're bringing in. That just simply makes sense, right? If it's a company that's not showing growth in revenue, then obviously there could be some concerns with that company. And we look for historical revenue growth, and that's what a lot of these big time investors do, right? When we talk about fundamental analysis, you're talking about the Warren Buffetts of the world, the Peter Lynch's. These guys, look, let me tell you about these guys. They love the fundamental analysis. They look for valued, very fair value companies, and potentially undervalued. They don't want the overvalued companies. So we look at this, and this is a company showing a price to earnings ratio of a 21.29. Now, what does that relate to as well? Obviously, that's an important line too. So you look at the price of the share, right? What's the price of the stock divided by the earnings per share, folks? And that's off an annual basis, right? You see this TTM, it's referring to trailing 12 months. So over the last 12 months, the price of the stock divided by the trailing 12-month earnings, obviously. Current price of the stock divided by the trailing 12-month earnings, which is a cumulative full year amount. So if you look at the full year, I mean, you would add all this up here from Q4 or Q1 of 2022 all the way to Q4, which they just recently reported here last month. Obviously relevant, I guess 2 months ago at this point. It's wild. It's already January. What a wildly quick year last year was. But you combine all these up, and then obviously on top of that, you're going to have your price of the stock divided by this total amount added up. That's how you get that price to earnings ratio. Now, if we look historically, somewhere around 20 is relatively in line with fair market value of most stocks, right? We look at just the indices. We're looking to hover around an 18 to 20 PE ratio historically. And now, right now, you see Apple trading at around a 21.29. Now, historically, this is a very low PE ratio for Apple. So there's a lot of things you need to look at when you look at that. So when you see a low PE ratio, you have to look at the other factors as well. Why would this be historically low for Apple? So typically, and I mentioned that too, companies that are in tech industries have historically been trading at higher PE ratios. We're talking about around 30 on average on a lot of these tech indexes or indices, as we should say. So Apple's trading below that value. Now, why does that happen? Obviously, there's a lot of things that could lead to that. Main one being just general market conditions that could be negative, and that's leading every stock down potentially. Other reasons being obviously this fundamental company-specific analysis, where you look at other factors. Is the earnings per share declining? Is the revenue declining or not growing? If that's the case, you'll likely see this price to earnings ratio go a lot lower. And I've got a couple different companies to take a look at there to give you kind of an exact example there. So first one here is going to be Kohl's, trading at a very, very low PE ratio with the current one. We see currently $25 per share, but then we go all the way down to the price to earnings, and this is a company trading at a 5.89 price to earnings, which is significantly below the average market. I mean, it's significantly below the market average right now. And then you look at factors as to why that might be. Well, we look and we've seen earnings per share has been a little bit shaky this past year historically. It's been a little shaky. So that's definitely something to consider. Get out of here, you Windows security nonsense. Then, what other factors can we really look at? Well, I mean, we look at the fundamentals down here. It's good that they have this entire little tab, which is lovely. That's not even going to show me. But then we look all the way down here. Look at this nonsense. Look at what we've had. We've had a relatively flat, basically all the way around here. We look at assets, pretty well completely flat. From an income statement standpoint, revenue, pretty well completely flat. You go all the way down to 2019, it's actually down slightly off of that. Even off of 2018, it's down from those numbers. It is up from 2021, which was a pretty rough year for them. But we've seen no revenue growth. We've seen EPS that's been stagnant, but to potentially declining. And for that reason, this is a company trading at a price to earnings ratio that is a lot lower than the market average. So that's definitely something you need to consider. And then we look at another company. Let's just take a look at. I should have had one pulled up here, and I do apologize. Let me pull up Amazon here really quickly because I believe this one's still trading at a high P ratio at the current moment. And if it's not, then screw me. Yep, there we go. So, yeah, when we look at Amazon, which is a company that's down pretty massively, we look over the last year here, the company's down 50% in share price. But then we look at some of these fundamental things, and maybe we can find out why. You look, in this year, we've had a pretty bad line as far as the EPS is concerned. We've seen some negative quarters, and that is leading to a price to earnings ratio of 77. Even though the stock is down so massively because of this lackluster earnings, we've seen such a high PE ratio now. So that's definitely something that you got to have. You got to consider it. So PE ratio feeling a little bit light here. Now, on the other side, why is this company still trading in a high PE ratio even after a 50% decline? There's a couple things to consider. Because technically it could be down a lot further, right? I mean, it really could be. But we look and we see these numbers. Assets seem to be continually rising when you look over a 5-year span. When you look over a 5-year span, revenue is skyrocketing, right? This is a company that's showing skyrocketing revenue. Back in 2017, we're talking about $177 billion. We're talking about $469 billion in 2021. Over a 5-year stack, we're talking about a 3x increase, right? And when you look at that, that's where you get these companies that trade at a lot higher of PE ratios, where the earnings per share aren't as relevant necessarily because there's other factors that are leading to this price going up. So that's just kind of a little brief look there at what fundamental analysis really is. Those are the things you look at, right? You're looking at the core of the company. Everything from this balance sheet, right, to the income statement where you see these everything from revenue, obviously, to operating expenses. Net income is another key line too, where they're significantly growing net income. Despite the fact that we're still showing low EPS lines, they're still growing net income. Right, so there's a lot of factors here that you take a look at, and again, I think we're a little off kilter here, and I do apologize about that. But yeah, that's what we look at when we talk about that. And let's go back here. I mentioned market cap on here too, and if you weren't sure what market cap was, because we'll take a look at let's just take a look at Amazon here, as we're already on there. Where you at? All right, there we go. Market cap. That's what Control F's for. Sitting currently, that's right. That's what's worth looking at here. $857 billion in market cap. You look at that and you're like, what the freak are you talking about? So basically, when you look at a market cap, you're looking at the share price times the number of outstanding shares. So again, we'll scroll back up to the outstanding shares, and what do we see? $10.2 billion, or 10.2 billion outstanding shares. And again, you look at a share price of $84, and that's how you get this market cap at $857 billion, if that makes sense to you. And obviously what's great here too is that it'll give you at least Charles Schwab here does give you some peers to look at as well, as far as you can compare market caps, price to earnings ratio, and see where the companies stack up when you're looking from a fundamental standpoint, and that is definitely something we like to do. Return on equity, that's pretty nice. Sales per share, look at that. Okay, look, folks, we got a little off topic, and I do apologize about that. I just love talking about this stuff. I absolutely do. The final topic is just how do you use this? And I think we kind of touched on that a little bit too while we went there. So one main thing, obviously, is you use it to just compare companies. That's the main thing you do to use, right? So what you would typically do if you're doing a fundamental analysis strategy, you're looking for companies that you believe, and then the data shows that are valued under what other companies are valued that are similar to it, right? You're looking at an industry, you're looking for companies that are valued a lot cheaper than the other ones that are doing similar numbers. And obviously, because it's fundamental analysis, market conditions are important too. So you're going to look at if it's even an industry that's viable in the future. That's another factor to look at. We dug into this, and you know me with numbers. Once we get into the technical analysis, which should be the next video, unless you want some more on this, I'm going to go bonkers on the technical analysis, folks. Obviously, we'll start with the brief one, and then we can go to the advanced after that. But listen, folks, I appreciate you sticking in with me in my absolute insanity. But I just love all you. Thank you. Bye.